Good morning. 8/11/2011 Dow Jones multi-year highs again for 2012 coming into play. As an expert in high frequency model computing and buy and sell script programs, they walk them to these higher levels, and it's a good time to be long when that is happening, naturally so. So when we look at charts today, we look at the weekly because it's one of the most important ones that you should look at today, more so than your dailies, and for one reason is that the computing big super buy and sell computing machines called high frequency, you can find it on our homepage at stockmarketfunding.com. How do you take advantage of it and walk away? But now that we have come up here, I'm going to show where the bottom was over here. Okay, this was in 2011 on the Dow Jones. You can see this diagonal trend line that shoots right up to the top and connects to that line right here, resistance, horizontal. Here, on the other hand, when you take this bottom here, this was where you got your initial spike, and we went through all of these, and that was another high frequency computing cycle machines that worked in the futures market. They worked all across the board simultaneously. So the human being really is not involved in these big weekly moves, because here was down at the bottom where Europe and everybody came in. This was 2011. We had shorted the Dow last year. You can find at every point in the high frequency model, if you go look at our videos carefully, go look at where we warned people and or we're training our MMT staff, market maker trader, which is different than your regular day trading community who's been washed out of the market by machines. So is it machine versus humans anymore? No. It is high computing frequency machines versus other high frequency computing machines within the asset classes of all of the broader part of the market. And what do I mean by the broader part of the market? I can give you an example. The example is all of your market, over the counter, which is NASDAQ, and listed stocks, and all of their indexes and everything that we cover. They work in a high computing cycle, and all of them. Look at all of these sector indices that we cover. We do. Look at all of the other ones that we cover, because we do. Now, why do we know what we're doing? Well, I can tell you why. The Dow is up here, and the high frequency model has gotten it to this wall of resistance. Now, let's go back in the first part of the year when we said the Dow was going to come tumbling down, when we were calling this weekly resistance area, and let's let this be the primary example of the calendar 2012 top on Dow Jones. So what they do, they crossed the bid and they brought it down to support. And then when we got down there, how do you know you're going to go up and test the same highs? And how do you put all of this into your advantage and understand the whole processes that go on in high frequency? Why is it all of a sudden that we have been talking about this for a number of years, and people like on the CNBC now and other stock channel networks or whatever are finally coming out and voicing their opinions on it? Sorry, they're years way too late. However, when we know that high frequency buy scripts are working, that's when you stay net long and you let them push it right up here to this top. We're at multi-year 2012 highs at resistance here. We had the greatest rally from this level. This is where it started. This is the second pass. This was a third pass. And then when you started the calendar 2012 out, look at where you started. You started right here on this weekly area. That's where that frequency went to that 4-week resistance level with the reversal, then the high computing machines popping it up. And how do high frequency computing buy and sell script machines work? We'll tell you differently. Right now, this is the analysis, but you had a rising 10-week, you had a rising 20-week, and it wasn't until the 10-week that got up there. But remember that these program scripts are developed by individual human beings that created the software and used today's technology to front run stocks such as quote jamming, such as cancel orders out. I'll do that in a different video. But nonetheless, we know how to gauge this and where that either we're going to break, we will let those computing cycles get to a level. They get to a mathematical level where they have to do this. Bam. Okay, at times. And that's a 5-week reversal short that we called on all indexes in the first part of the calendar year. And we'll update them. And we'll be coherent to the fact that that's exactly what we did. So you get these corrections, but then you get these leverage up tapes with these high buying computing cycles. Why everyone was sitting on the sideline here, they were sitting on the sideline here, and right now today that we have this move because of all the Europe stuff and everything going on around the world, you're leveraging up. But then again, most of your bigger community people, such as mutual fund buyers and institutional buyers, and a lot of them, they're not involved in these moves because they don't know what to think of it either. When you look at the face of systemic risk and austerity, which is true, it is true and it's valid why these people feel the way they do. However, we will caution you like we've always done before. And we're here to do that now. And we are. The thing that I want you to do for me is the following. The reason why we've incorporated more and more about high frequency is that within all of these various indexes that we cover, you can see them here. They're updated every so often. We update them for our MMTs and our network, and the public gets to view them for free. It gives you a little bit of a guideline of how markets have changed. But when we see the broader markets and buy scripts, it's time to be long, not short. And you let the high frequency trading machines do their thing and let them run it. So once you get your entries on index calls, you can make lots of money. You let these high frequency trading models work for you. And the only way they're going to work for you is when you learn about how they work. Once you learn that, then you can simply click on our high frequency trading courses. See, I didn't resume it. Here we are back to stockmarketfunding.com. And what I'm going to show you is a model that is used. I didn't get this last part, but I want to cover that the top 10% steal from 99% using advanced technologies and high frequency algorithms to take away money from you. Retail investment community, that's what they do. Now, when we look at the Dow Jones, because that's what we're looking at, is how did the Dow Jones get to this 2012 August period resistance level? Well, they're buy scripts. And what we want to tell you is that the trading school does and will address all of it. And what we invite you right here. Join the SMF Market Maker School. High frequency trading courses, okay? Under the service tab, click HFT. Once again, I'm going to tell you that it's important that everyone learns how did the Dow Jones make this calendar year high, and how did the Dow Jones from last year, in the wake of austerity with Europe and central bankers flooding the system and printing money and everything alike, and Mr. Ben Bernanke and election period and the whole thing involved. The earnings season, not that great. People are making less money. People don't know if they're going to pay taxes. But then the high professional community part of Wall Street can't figure out why they're back up at the high. Well, it's simple. It's very simple. It means that the individual stocks and stock futures and many other combinations of things have been used in buy scripts to move it in that direction, while everyone else would stay on the sideline and not participate, because that's what happens.